friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened in the market and how we can plan for a good trade tomorrow. So, this is analysis for December 23rd, Thursday, 2021 tomorrow. So, how's the market today? It is a gain of 1%, and it looks like markets are looking at 17,000 for the expiry tomorrow. So, let's get into see for the details. If you're not subscribed, to subscribe and share it to friends and colleagues. Right, so this is a pre-market analysis as usual, and this is for December 23rd. Look at all of these parameters on the left side on the charts. Right, we will also look at traditional parameters to analyze, and we'll have some rapid actionables also. So what happened? Look at this candle here. It's a green close, right? Green close which is gone, which is when there is a gap here, and the gap is clearly closed now, right, on the Nifty, and it closed above the previous day's candle on the Nifty. Yeah, and Bank Nifty still under the shadow of the big candle day before yesterday, but it was a green close and closed above previous day's high as well, and there still exists a gap, right, on the Bank Nifty. So what is more, 1% of more, like 185 points on the Nifty, close green, and it's right above the gap resistance and just below the 70,000, right? So close at 16,980, something in that range, right? So Bank Nifty is 1.2% up, right? It gained 422 points, which is a green close, and it is above the 35k. It's a rounding psychological 35k is conquered, and it closed above the previous day's close also, right? So intraday action, if you look at this is what happened. Nifty had a gap up, then it lost almost everything that it had gained, almost, but didn't go back to the close level, and then recovered that, and then further turned it up. In the last 1 hour we had good move, right? Bank Nifty also gapped up, gave up everything with a big fall back, almost everything in the case of Bank Nifty, and recovered in the afternoon. It made a last 1 hour big move. So that's the price action. So it was choppy gap up day, I would say, intraday action, right? Now look at the volatility. This is what Bollinger Bands is saying. You look at this lower band is trending. It has expanded on the downside. The Bank Nifty the same, it's expanded on the downside. Although the price has moved up, the expansion has not stopped. No, overall, Bollinger Bands on the Nifty and the Bank Nifty short term, it says that bearishness could continue. Although right now the market is attempting to move towards this median. Right, it is getting attracted back to the median. Whether it gets resistance here at the median level of 7200 and then again comes down, or would it go further up to the upper band and then break out this lower low, lower high pattern, and we never know, right? But as of now, it is attempting that, right? But Bollinger Bands still says the story of a probable or bearishness as of now, as the lower bands are expanded downside. Yeah, support resistance levels. Look at this. Right, where are we? We're at support 16,900 is Fibonacci 38, and if that is gone, you go back to 16,700, 16,750 support zone. If that breaks, then you go back to 16,550, 650. That goes, then you go back to 16,350, 450, which was near to the previous swing, and also a Fibonacci 50 retracement level. On the upside, resistance is at 17,000, and if that's taken out, then you go to 17,200 and 17,300, and above that you have the 17,350, 450, and then above that you have the 17,500, which is also Fibonacci 23 retracement. So that's Nifty. Right side Bank Nifty, it's at a support of 34,000. Yeah, so it's not fully visible here. Let me just go to the directly. So that's the resistance right now. So the support is 34,350, 34,750, which is Fibonacci 61. That's the support, which is broken, then you go back to the 34,000 zone, and if that is broken, then you go back to the previous swing low, which is 33,950, 34,000. So if that is broken, then you go back to the support of 32,400 to 32,800, right? On the upside, similarly, it is 30. So immediate resistance that has to record is 35,300. No, it is at the lower end of that 35,000 level, and the next one would be 35,600 to 35,900. Then after that is Fibonacci 60, Fibonacci 50, which is 36,600 level, has to be taken. That's resistance and the supports on the indices, right? Make a note of this and correlate these levels, the immediate support, two supports upside and two supports bottom side that we discussed, no? From Nifty and the Bank Nifty, correlate that with the operator data that we'll be seeing in the next slides. So coming back to the momentum and divergences. Momentum, as you can see here, the Nifty has crossed over to the sideways zone from the bearishness, but the Bank Nifty remains in the sideways zone on this daily time frame. But you can see that there is a 15 bar, let's say kind of diluted, but it's work in progress divergence momentum, which is bullish in nature, and it can go up to this 17,500 levels. Similarly, the Bank Nifty also, it can go up to the 37,400 kind of levels, and there is a bullish divergence that is work in progress, but it is diluted. Make a note of that. So medium term, the momentum is sideways on both indices. Coming to the trend, ADX indicators are showing that the DMA negative continues to be on the short term on Nifty and Bank Nifty, and the bearishness is increasing. As you see, the green strength indicator is moving up in the medium term. It continues to be DMA negative dominating on both the indices of India. So that is a trend. Volatility today it cooled off further 5.5% and settled at 6.58. And blind volatility is 18.16, and then IVP has dropped to 58.7, and looks like India VIX is cooling off the last few days, and then it's not really at the bottom. Bottom comes to near 15, that kind of levels, but the range is between 15 and 20 and seems to be maintaining that. So if it is further scope to cool off a little more, also as it is scope to gain toward back to the 20, so it's hovering between that. So anytime it breaks out of this 20 levels, then you have to be cautious. Openness data is showing, so tomorrow is expiry, so it's very crucial to note the open interest analysis, right? So this is with expiry 23rd tomorrow. So open interest, look at this, it's overall it's bearishness or call rating what is dominating on both indices, you can see, but you can see that the highest put rating is in at 16,800, not at 17,000, and after that you have 16,500. But the resistance seen at 17,200 and 17,300 highest, right? So that is interesting, right? So that does not give you a decisive saying that you may have the 70,000 taken out or not. No, open is not saying that. It's not giving much clues. It's saying that right now the level is very close to 17,000, but the maximum support is only 200 points downside, and the resistance is you can see that's it's around 300 points up, so it's not giving much clue whether 70,000 will be taken out or not. But yeah, so that's the maximum call writings and put writings of resistance levels and put call ratio. Yeah, we forgot that. Let's look at the MACD also. 34,000 and 34,500 is where the maximum put writing is, and call writing is at 36,000 and also 35,000 also. So that's a wide range. You can see that a lot of puts writing, the change in open interest can be seen. A lot of put additions are happened here on the Bank Nifty and also on the Nifty, right? Similarly, huge call additions have not happened. So build up on the futures is also long on both sides, long build up. So overall, it put more up is what open interest data is showing. Put call ratio is not also 0.84 is near to bullishness, you can say. It's not bearish at all. So there could be an attempt to take out the 70k, although the open interest range is pretty wide. 200 points on downside and 200 points upside is where the highest put and call writing is there, right? So look at the heat map, right, of Nifty. You can see that two, three heavyweights. The IT is doing excellent, and the banks also. Most of them quarterbacks is private banks, and you can also see Bajaj Finance rising up. For some reason, HDFC didn't work out well, but yeah, so that's why the market went up because of all these heavyweight stocks. Reliance moved up 2%, IT is supporting, right? And banks also supported today. Yesterday, bank was not supporting, so that's right. Now, sectorial performance indices sectors, if you see, it's all green, right? All the market, all the sectors went up. Look at this, the IT has turned bullish now on the momentum. About 1% today, now weekly and the daily, it's bullish on the momentum. It's time to pick up the stock. But otherwise, other sectors, metal, more of nearly 2%, auto, more of 1.5%, then 2% on pharma. 2% on pharma, that is good. FMCG, 0.5%. FMCG, for some reason, it's staying flat. Reality has come back, the 3% bounce back, and it's all sideways, right? Except IT, all the short term momentum is sideways. So, let us wait some more time before I can pick up the stock. But IT, time to pick up the stocks. Institutional participation data for today has not come, but definitely it might have been very less selling by the FIS. Yesterday also that reduced it from 3,000 to 1,000. So, reduced the selling as the now holiday season comes in. Mostly they might have stopped the selling or reduced it. So, today it might be less selling by the FIS mostly. But you'll have to look at the data later. But this is data as of yesterday. Huge selling continues with the institution. Um, last several days, that has been the biggest worry. No, dollar index is showing that it's consolidating after the two, breakouts that are done, and correspondingly, you can see a big call off that has happened, and this on the NSE traded, USD INR currency pair. You can see that it is cooled off, and then it is at a breakout zone or the previous. Now it is taking a resistance from where it had broken off, basically. So that consolidation. But one thing to notice that the momentum is still bullish, although it is slightly slipped today. But it looks like a range. If there is a potential that it can remain at the 75.5 kind of levels, or even not of course much is what the momentum is showing. But if the momentum is unable to sustain and drops off, then you can be sure that it is coming back to the usual to the channel bottom. You can go up to the next supports below, right? So that's what the currency pair and the dollar index is showing. Crude oil has cooled off. It has dropped off, but it made it to 70 kind of levels today also. So gold is consolidating the same point where same support point since long time and continues to do that. It's not even attempting to take out the resistance on the upside of the channel top. It's not doing that. It's comfortably consolidating the same point since very long time. An attempt happened since long. US market had record. Dow Jones, you can see it is not open today. But yesterday's data is showing that it is gapped up and recovered from the fall. And you don't see any big moves on the US or European markets as of now. You have to check this pre-market, and also European markets you have to check in the afternoon, right, to get a clue on how it could potentially reflect on the buying or selling in our markets also, right? Actionables to actionables. Sun Pharmaceuticals seems to be breaking out of the channel, and the moment is on the edge. Just have to make sure that the momentum moves above the 60 and then confirms it, and only then have to go long. But it looks like clearly a breaking out of the channel. The momentum is on the medium term also is good, and trend also is good, and you could attempt that. And Tech Mahindra, IT is the only sector performing, and Tech Mahindra is well within a channel up move. Momentum again is at the brim of the breakout in the bull zone. So both these stocks have positional place, but take the trades only after the confirmation that the momentum is going to into the bullish zones confirmed. Only then you have to take the trades, but then take it on a daily time frame lower for a swing trade. But so it's a mild bearish view still, combined with a sideways move, a neutral view you can say for tomorrow. Because tomorrow is an expiry, right? Male bearish because the charts are saying that the chart patterns are still saying it. Right, candlesticks are moved up, but overall, if you see, it is the trend is clearly bearish, and Monday is bearish. It is turned sideways on only the Nifty, not the Bank Nifty. Support resistance levels patterns overall, no, you just can't escape to say that the short term it is still bearish, and the neutral is because it is bounced up and then closed above the previous day's high, and so and is an expiry day with the levels the option sellers have in mind will be somehow maintained. So that's the reason why there is a neutrality also coming in there. So Nifty did close above the previous day's close, and took out the immediate resistances also that the gap was taken out on Nifty, not on the Bank Nifty. And Bollinger Bands also showing the bearishness. Right, overall it has not gone sideways. It's not indicating that no, I'm going sideways. It was earlier, but now no, the expansion is towards the downside. So expiry day opportunity can be there. Open interest levels has to be kept in mind, and chart levels has to be kept in mind, and then on breach or on resistance found at each of these levels accordingly allowed to pay the intraday and expiry day. It would take little extra, we could take a little extra risk based on the change in open interest also. Right? If there is a huge difference between the put and the call open interest change of open interest, then that gives you some indication that the the where the expiry is going to be ending up at. Right? But still, because of the volatility levels, anything will happen. Right? Gamma effects can also come in the expirities. Now the VIX is cooled off, and there is scope for further cool off also, but it is near to the lower level 16, 15 kind of level. So there is a possibility that it can main revert and then gap up also. But obviously, one day it may not go to the 20 levels, but coming days, as long as it's not above 20, it is playable, right? You can play the game, but otherwise, it may go out of hand. So, the last section is a repetition, right? It's probably still not too late to research and find some quality stocks and invest in that, because you still may be getting some of them at a very good price. So, option buying and selling. Short side buying in option buying and the selling or on the short side could work out, right? Could continue to work out when the market is in the various zones, as long as you have the stop losses in place and the position sizing as well, that rules are well maintained, and that, or you should be having hedged positions with not again the margins alone but hedge positions too, as vertical spreads, so that your risk is known ahead of the play, right? So play safe. So that's a wrap up of my view on the market, and hope it helps to frame your own independent market view and also your own plan. If it helps in any way, consider hitting like button and then share different colleagues. Thanks for watching. Happy trading, happy learning. Bye.